Welcome to RealCast, the weekly roundup of the real asset markets. My name is Richard Betts and I'm joined by Judi Seebus, Dynes and Nicol Dynes. Let's start with the roundup of the week. Judi, what have you been following this week?
The earnings season is upon us, and this week we saw Prologis, the leading logistics player, come up with some very good earnings, better than expected, both globally and in Europe. We've talked about this before. I think the logistics sector is clearly one of the winners from the COVID-19 crisis, with more people shopping online, and demand from e-commerce players is very strong. And Prologis is seeing these trends in their figures for the second quarter. They saw that vacancy levels in Europe have declined further from 4% to 3.6%. And they said 60% of their customers are expanding. So that sort of sets the scene for a good second half. They're more optimistic about the second half than they were in April, just after the crisis broke out. And they're even talking about like rental levels at the moment are flat, but their long-term outlook has strengthened, and they see the growth trajectory that they were on before the crisis resuming again next year.
Dan, what have you been picking up?
This week there was an interesting article in The Guardian here in the UK by Gavin Chait. Now, he's an open data scientist and development economist at a company called Whitehawk. And he talks about how most economies have become reliant on this twice daily kind of dam burst of commuters backwards and forwards between home and work, and supporting all the retail and other businesses around that economy. But of course, when people work at home, they need more from where they live. So being a data scientist, as many of us aren't, but he's done a lot of research into this, and he's noted that less than 16% of the population in the UK lives within 200 metres of a retail cluster. In London, for example, he predicts that in the London borough of Lewisham alone, he thinks that Lewisham could create 1,000 new retail jobs to serve more than 2,000 new office workers, adding new shops and offices. And other towns that people once thought of as sort of sleepy commuter towns around the UK, around big cities, might even need to build new units as they kind of run out of space. That there are some real estate companies that are already ahead of the curve in this respect. One of those is the Commercial Park Group, led by John Baker. He's already investing into satellite conurbation towns around Greater London to appeal to those companies that know that their employees won't want to commute, or employees who simply won't commute after COVID. The other piece I saw, back to sort of more traditional real estate, was a great article in Property EU from Dominic Gover. AXA Investment Management, they've raised €1 billion to close its second European infrastructure debt fund. That's come from institutional investors in Europe and Asia, and they've already invested into Spain, Germany and France. And that infrastructure debt platform that they have at AXA now totals some 7.3 billion with over 80 transactions. So we can see that infrastructure is a really sort of burgeoning sector within real estate now.
It's been interesting to see how the sort of real asset side has really come to the fore, especially including infrastructure. I did an interview with Cristina Garcia-Perry of Azora, also talking about their real estate side, but also about the renewable energy side of their business, which is something normally she doesn't get an opportunity to discuss. Nicol, what have you been picking up?
Well, on the retail side, in the UK, the Office of National Statistics released the latest figures on Friday, and more positive than expected. In June, retail sales increased by 13.9% after the 12.3% rebound in May, compared to a nearly 20% drop in April at the height of lockdown. And the other trend, which is well known, is that online sales have reached a new record high of 33.3% in the UK, which was already obviously the leader in e-commerce in Europe. The big question mark, obviously, is about the future, especially in the UK in October when the furlough scheme ends. So the ONS seems to think that consumers are likely to have a very cautious approach to discretionary spending going forward. So more positive than expected news, but a question mark over the future, over the second half of the year. While similar figures in Poland, BNP Paribas came out with a report on retail in Poland. And again, a very positive picture. They're back to 80% footfall, and the sales drop between January before lockdown and May after lockdown was only 6% down. So again, a positive picture, but in Poland, less question marks over the next few months.
I also noticed, Judi, that there was another logistics deal in Italy this week.
Yes, that's right. Our Logistics Capital Partners, the UK-based logistics specialist, announced that they had completed a very, very large logistics building, or two buildings near Milan, in an area that is a real very strong logistics location. They went ahead with this project despite COVID, and they managed to sell it immediately after it was completed to GWS. So I think that says something about the strength of the logistics market. We're also seeing speculative development return to the logistics market. Just last week we saw a development in Germany by Verdion, and the fact that we are seeing some speculative development in a crisis situation, I think that says something about the demand for this type of real estate. And Prologis in the past has done research saying that e-commerce players need 3 times as more logistics space as traditional retailers. So with e-commerce booming, there's going to be more demand.
Logistics side has just been growing exponentially. Nicol, in terms of looking at that operational side, we've obviously been covering a lot on that recently. What are some of the key trends that you've picked up?
Well, there certainly has been a shift in attention, in focus from the bricks and mortar, from the actual asset, to what you do with your asset. And so the importance of having good operators, and then these operators showing very deep knowledge of the local market and also flexibility when it's needed. And we've seen that, for example, in student housing with the crisis and the less students being able to attend courses and not sure what the future holds. The good operators have started offering dynamic pricing, so allowing students to have 6 months contract and paying a little bit more instead of being locked in for the usual academic year. And that's proved very successful in Europe, as well as in places like Australia, which have been particularly badly hit by the coronavirus crisis. And the same thing we've seen in another sort of operationally heavy, as it were, sector, which is senior housing, which is particularly badly hit by the crisis. But again, the good operators were very proactive, and many of them, we've seen particularly good examples in France, locked down their assets, their care homes, long before the government forced them to, and therefore shielded their residents and saved the business, as well as obviously the residents, in a way that in other places less good operators failed to do.
And next week, obviously, we're expecting the results from RCA in terms of the data for the first half, Judi. But I think there's some previews of that.
Yeah, that's right, Richard. Real Capital Analytics has just provided a sneak preview of what we'll see in Germany, where transaction volumes in the first half are almost 10% ahead of what they were a year ago. And that very strong growth is mainly due to a couple of big residential deals in the first half between Addo and Adler, around town and TLG. I think elsewhere we're going to see a sharp decline. In fact, RCA has also provided commentary in the last couple of weeks about other aspects of the market, and they made a comparison between the decline in transaction deals now during the COVID crisis compared to the GFC. And basically what they're saying is that the severity of the decline now is much faster, and it's unprecedented in its speed. So, the forecast is that deals will overall be down by almost 50% in Europe, which is very, very steep.
Next week, we'll pick up a little bit on some of those RCA figures. There's all the data then for the first half, and we'll do a review of that. Thanks very much, Dan. Thank you, Judi. Thanks, Nicol. Thank you for joining us, and look forward to seeing you next week. Thank you.